Well, today is January 7th, 2023. Let's start with our disclaimer, go over the calls, and make some predictions. This is my trading plan for Monday, which is January 9th, 2023. Please remember I can be wrong, and any trade you make should be at your own risk. Well, here's what we said. I had all kinds of negative stuff, but I said that the employment report would come out before the open. Didn't have a reliable way of predicting the reaction. Couldn't rule out gapping up and sidestepping. Recent action remains bearish. So I don't think anything's changed. I couldn't rule out gapping up first, and that would happen. We did get the pattern with the early high, but I said often you would get a late low which is higher than the early high, and that's what happened. During the day, MEJT said this rally is a false move, gives us a target of 38.69.55, most likely to print before Monday's close, and unless we gap up smartly, that's my call. We had this old target from the 4th of January, 38.57.25, and that printed. And here's the new target. We talked about this wall with gap pattern. We said normally it'll fill within a day or so. If it doesn't fill within a day or so, it should fill, but doesn't have to fill anytime soon. Well, it filled within a day or so. We also saw within the first 5 days of trading, we traded outside the range of the first 2 days of the year. Let's talk about what should happen now. Let's remember as we talk, this is a clear 5-wave pattern. And let's see what it accomplished. This is our long-term chart. We have 5 waves up. This is the low we think will hold. 5 waves up. We need an ABC at some point. If that's A, at some point you'll get a red B, and then you'll get a red C, and the reward for being short at the top of red B is to get a move similar to red A, which is over 300 handles. Let's look at this internal structure. Well, here's what I'm calling 1. We have an ABC for 2. You can now count this as an ABC. Here's A. There's B and there's C, and C is equal to A. It isn't the only way to count it, but ABC is one of the typical patterns in which this black B of this degree can resolve. Now this move up here was a 5-wave structure, so if it isn't a wave C of some degree, what is it? I don't see how it can be an A. It certainly isn't a 3 or a 5. If it's a wave 1, how do you count this other stuff? Now here's the prior consolidation. Here's the low of the prior consolidation, 39.06.54. The high stopped short of the prior consolidation and also could not clear the high of the current consolidation. So for right now at least, this is a rally within the consolidation, hasn't broken out of it, and it's a rally to, but not through, a resistance area because the lows of the prior consolidation are resistance. Now we've said, since we got this move up, that just as the wall with gap pattern we had Friday should fill at some point, we think this wall with gap should fill at some point, and that takes us down to the 3850s. Now this high not only completes an ABC, but it's a Fibonacci 161.8% target of the prior consolidation, or the middle of this consolidation. But that's not all. This is the gap that should fill at some point. Here's the height of the first move off the gap. The high we saw since then is a Fibonacci target of this first move. And yesterday's high is also a Fibonacci target of that first move at 61.8%. So we have a rally within a consolidation. It goes to, but not through, resistance, and there's a target of the first move of this gap, and that should retrace at some time. And that's on top of the lower MEJT target. Now usually rallies like this will stop within the fourth wave of lesser degree, and this one didn't. The high of that fourth wave was 38.89.82, and we closed at 38.95.08, and that's higher than it normally closes, but Monday's open can be a substitute for Friday's close. So while it's not required that we stop this within a prior fourth wave of lesser degree, it's common, and so it would be common, not required, for us to gap down Monday at or under 38.89.82. And if we gap down enough, and enough is kind of subjective, I admit, and keep dropping, it would suggest that this ABC completes wave B of this degree, and that we're starting wave C. We don't know that yet. We don't even know if we'll get down yet, but at least this is one candidate for the end of this consolidation. Well, Monday's pattern has the early high. We could still gap down. There's a lower MEJT target unless we gap up smartly. The rules call for it to print. We gapped up, hit a higher high, closed under midday highs. Unless we gap and promptly overtake the high a day, lower prices should print even if we don't close lower. Friday's rally stopped at resistance and couldn't break out of the current consolidation. If we don't gap up smartly, the odds favor a retrace. And if we gap down, it's not required, but there's a substantial risk of that happening. So we have the pattern with the early high, but there's a likelihood, not a requirement, to gap down. And if the gap down has legs, it's possible we've completed this whole consolidation and are ready to break lower. That we won't know until Monday. And that's today's call.